What if I told you that while Bitcoin grew 200% last year, some altcoins surged over 5,000%? But here's the flip side. For every success story, dozens of projects crashed to zero, taking investors' money with them. Welcome to the high-reward, high-risk world of altcoin investing. I'm from Bitcoin Nexus, and today I am breaking down exactly how smart investors separate the hidden gems from the full gold in the altcoin market. Whether you're considering your first altcoin investment or looking to refine your strategy, this is the guide you need in 2025. Before we dive in, let's get clear on what we're talking about. Altcoins are simply any cryptocurrency that isn't Bitcoin. The term comes from alternative to Bitcoin, and today, there are over 10,000 different altcoins in existence. But why would anyone look beyond Bitcoin? The answer is simple: potential. While Bitcoin has the strongest brand and highest market cap, altcoins offer unique opportunities that Bitcoin can't match. First, there's the growth potential. A small-cap altcoin can multiply several times over in a bull market simply because it takes less capital to move the price. Second, many altcoins aren't just currencies, they're technology platforms solving specific problems. Ethereum revolutionized the space with smart contracts. Chainlink connects blockchains to real-world data. Solana prioritizes transaction speed and cost. And third, diversification. Even in crypto, it's risky to have all your eggs in one basket. But with these opportunities come significant risks that you need to understand. Let's explore both sides of the altcoin equation. Part 1. Understanding the altcoin landscape. The altcoin market is incredibly diverse, with projects spanning different use cases, technologies, and investment profiles. Let's break down the main categories. Platform coins like Ethereum, Solana, and Cardano provide the infrastructure for building decentralized applications. These are often considered the blue chips of the altcoin world because they have established ecosystems and developer communities. DeFi tokens power decentralized finance applications that aim to recreate traditional financial services without intermediaries. Examples include Uniswap, OV, and Compound. These tokens often give holders governance rights over the protocol. Utility tokens serve specific functions within their ecosystems. Filecoin, for instance, is used to pay for decentralized storage, while Basic Attention Token rewards users for viewing ads in the Brave browser. Stablecoins like USDC and DAI are designed to maintain a stable value, usually pegged to a fiat currency like the US dollar. These provide a haven from volatility within the crypto ecosystem. Meme coins like Dogecoin and Shiba Inu began as jokes, but gained significant value through community support and viral marketing. These are typically the most speculative and volatile investments. Privacy coins such as Monero and Zcash focus on providing anonymous transactions, addressing one of Bitcoin's limitations, its public ledger. Understanding these categories is crucial because each comes with different risk profiles, growth potential, and investment considerations. A platform coin like Ethereum behaves very differently from a meme coin like Dogecoin, even though both are altcoins. Part 2. The Volatility Factor. If you think Bitcoin is volatile, altcoins will take you on a whole new roller coaster ride. It is not uncommon for altcoins to experience 20 to 30% price swings in a single day, movements that would be considered extreme for traditional assets or even Bitcoin. This volatility stems from several factors. First, lower market capitalization. Most altcoins have a much smaller market cap than Bitcoin, meaning it takes less trading volume to move the price significantly. A single large bear or seller, often called a whale, can dramatically impact prices. Second, thinner liquidity. Many altcoins trade on fewer exchanges with lower trading volumes, creating wider bid-ask spreads and more price slippage during large transactions. Third, sentiment-driven trading. Altcoin prices often move based on news, social media hype, or influencer mentions rather than fundamental changes in the project's value. Fourth, market correlation. Despite their technological differences, most altcoins still show strong price correlation with Bitcoin. When Bitcoin drops sharply, altcoins typically fall even harder, a phenomenon crypto traders call altcoin bloodbath. This volatility creates both opportunity and danger. During bull markets, altcoins frequently outperform Bitcoin by significant margins. During bear markets, however, many altcoins lose 90% or more of their value, and some never recover. Understanding this volatility is essential for setting realistic expectations and managing your risk exposure. Never invest more in altcoins than you can afford to lose, and consider using dollar cost averaging to mitigate the impact of short-term price swings. Part 3. Evaluating altcoin investment opportunities. With thousands of altcoins competing for attention, how do you identify those with genuine potential? Let's walk through a comprehensive evaluation framework that combines fundamental and technical analysis. Fundamental analysis factors. First, examine the problem and solution. Every worthwhile project should clearly articulate what problem it is solving and how its approach is better than existing alternatives. If a project can't explain its purpose in simple terms, that's a red flag. Second, assess the technology and innovation. Review the white paper and technical documentation. Is the technology feasible? Does it offer meaningful improvements over competitors? Projects with genuine technological advantages have better long-term prospects. Third, evaluate the team and backers, research the developers, advisors, and investors. Look for experienced teams with relevant backgrounds and reputable investors. Anonymous teams represent higher risk, though there are exceptions like Bitcoin itself. Fourth, analyze the tokenomics. This includes the token supply model, distribution, and utility within the ecosystem. Questions to ask include, is there a capped supply? How are tokens distributed? What gives the token value beyond speculation? Be wary of projects where insiders hold a large percentage of tokens. Fifth, examine the community and adoption. Active developer communities, growing user bases, and increasing transaction volumes are positive indicators. Check GitHub repositories for development activity and social platforms for community engagement. Technical analysis considerations. While fundamental analysis helps identify quality projects, technical analysis can help with entry and exit timing. Look for support and resistance levels that have historically affected price movements. Watch for trading volume as a confirmation of price trends. Strong moves should be accompanied by increased volume. Consider market cycles. Altcoin seasons typically follow Bitcoin bull runs as profits flow from Bitcoin into alternative investments. The most successful altcoin investors combine both approaches. They use fundamental analysis to select quality projects and technical analysis to optimize their entry and exit points. Part 4. Major risks in altcoin investing. Understanding the risks of altcoin investing is just as important as recognizing the opportunities. Let's examine the major pitfalls to watch for. Project failure risk is perhaps the most common. The harsh reality is that most cryptocurrency projects will ultimately fail, just as most startups do. This can happen for various reasons. The technology doesn't work as promised, the team can't execute their roadmap, or the project simply doesn't find market fit. Always consider whether a project has sustainable competitive advantages. Security risks are prevalent in the crypto space. Smart contract vulnerabilities have led to hacks costing hundreds of millions of dollars. Custody risks exist when storing tokens on exchanges or in hot wallets. Protect yourself by using hardware wallets for long-term holdings and only using reputable exchanges with strong security measures. Market manipulation is unfortunately common with smaller altcoins. Pump and dump schemes, where organizers artificially inflate prices before selling their holdings, target inexperienced investors. Be especially cautious of projects heavily promoted by influencers without disclosure of their compensation. Regulatory risk varies by jurisdiction but can significantly impact altcoin values. Securities regulations, anti-money laundering requirements, and even outright bans in some countries can affect your ability to trade certain altcoins. Stay informed about regulatory developments in your region. Liquidity risk becomes apparent when you try to sell a less popular altcoin during market downturns. You might find there aren't enough buyers at reasonable prices, forcing you to accept significant losses or remain invested longer than intended. Obsolescence risk occurs as technology evolves rapidly. Today's innovative project might be tomorrow's outdated technology. Continuous development and adaptation are essential for long-term success. Being aware of these risks doesn't mean avoiding altcoin investments altogether, but rather approaching them with appropriate caution and risk management strategies. Part 5. Responsible altcoin investing strategies. Now that we understand both the opportunities and risks, let's discuss strategies for responsible altcoin investing. First, position sizing is crucial. A common approach is the barbell strategy, allocating the majority of your crypto portfolio to established assets like Bitcoin and Ethereum, with smaller positions in higher risk, higher reward altcoins. For most investors, limiting altcoin exposure to 20 to 30% of your total crypto portfolio is prudent. Second, diversification within your altcoin allocation. Spread your investments across different categories and use cases rather than concentrating in one sector. This helps mitigate project-specific risks. Third, implement a clear investment thesis for each position. Before investing, articulate why you believe in the project's potential and what conditions would change your mind. This helps avoid emotional decision-making during market volatility. Fourth, use dollar-cost averaging rather than lump-sum investing. Regular small purchases over time reduce the impact of volatility and prevent the regret of buying at market peaks. Fifth, set target prices and take profits. Unlike traditional markets, crypto bull runs can see assets appreciate hundreds or thousands of % in short periods. Having predetermined levels to take partial profits helps lock in gains while maintaining exposure to further upside. Sixth, maintain a long-term perspective while being willing to adapt. The most successful crypto investors think in years, not days or weeks, but they also recognize when fundamentals have changed. And finally, continuous learning is essential. The crypto space evolves rapidly, with new projects, technologies, and market dynamics emerging constantly. Dedicate time to research and stay informed through reputable sources. Remember that even the most successful crypto investors have made significant mistakes along the way. The goal isn't to avoid all losses, but to ensure that your winners more than compensate for your losers over time. Conclusion: altcoin investing represents both extraordinary opportunity and significant risk in today's financial landscape. The key to success lies not in finding the next 100x moonshot, though that is certainly possible, but in developing a systematic approach that balances potential rewards against manageable risks. As we've discussed, this means understanding the different types of altcoins and their unique characteristics, recognizing the inherent volatility of the market, applying rigorous fundamental and technical analysis, being aware of the multiple risk factors. Implementing responsible investment strategies. The altcoin market will continue to evolve, with new projects emerging and existing ones either flourishing or fading away. What won't change is the importance of doing your own research, managing your risk exposure, and approaching these investments with both enthusiasm and caution. If you found this guide valuable, please hit that subscribe button to join our community here at Bitcoin Nexus. We're dedicated to helping you navigate the crypto landscape with clear, actionable information. Drop a comment below sharing your own altcoin investing experiences or questions. I'd love to hear from you. And if there is a specific aspect of crypto investing you'd like me to cover in more depth, let me know. Thanks for joining me today. I'm from Bitcoin Nexus, and I'll see you in the next video.